Good morning, everybody. Welcome to the stream. We've got a very exciting day today. The CPI data just came out about 30 minutes ago. We're going to talk about it. We're going to break it down. It wasn't the best news. It was kind of what we were expecting, but if you actually look at some of the charts like we're about to do, you'll see a very interesting picture. So it's good news if you're in the stock market overall in the S&P, because look at this. The S&P started moving up right at 8:30. On the news that the CPI data was in line with expectations. The dollar, on the other hand, on this chart right over here to the right, started plummeting. So the dollar, right at 8:30, it looks like couldn't quite decide what to do, and then decided to take a turn to the downside, and people started dumping their dollars. And if you actually look at the 30-day chart, you can see that we're making some lows over there. So we haven't been doing great dollar-wise for the past while. This is just the latest step to the downside. And looking at the yearly chart, you can actually see we might be on the beginning of a sharp descent for the dollar. So we'll see what happens with that. But we're going to talk about the CPI and a couple of other things this morning. We have an interesting story regarding crypto as well. Cryptos, we'll look at those too. They're actually doing pretty good on this news, right? As people are dumping the dollar, some people seem to be flocking to cryptos. So first off, Wall Street looks higher after two-session tech rebound. So tech stocks are doing good. Once again, we'll pull up the QQQ right here over SPY. And yeah, tech stocks doing good. So they did rebound over the past couple of days. They've been doing decently. They're mostly what's driving this rally, right? Tech stocks tend to be the largest market cap stocks out there. And they do tend to lead the market, right? They tend to take the market where they want it. SPY follows the tech stocks essentially because they're just that big. They're the biggest market cap ones, multiple trillions of dollars worth of market cap in each stock sometimes. I mean, Microsoft, Apple, both multi-trillion dollar market caps, and Tesla is a $1 trillion market cap also. So the tech stocks are absolutely leading the charge, taking the markets wherever they want. And a lot of the smaller market cap stocks tend to get left behind. I was hearing something interesting the other day. I might try to find an article on it at some point, discussing how the small market cap stocks, how something like 2/3 of them are in a bear market and have been for months. And you wouldn't know it by looking at the yearly chart for the SPY, because look at this, it's just going up and up and up. And a lot of the small market cap stocks are just getting crushed. So apparently, most of the SPY is just driven by those large market cap tech stocks. And, that's what we're seeing again today also. The tech stocks, once we have that market map coming up, that should be up shortly after 9:30 when the market officially opens. I'll be sure to pull it up, but you'll see probably that the tech stocks are going to be fairly green, and that's why the market is fairly green today. But the dollar, not so much. For those of you just joining, I'll pull this chart up right here on the top right. The dollar did start plummeting on the CPI data coming out, so we'll see what effect this really has on the economy over the next couple of days if any stocks start making moves based off of this. Already some have, right? Tech stocks are up. And gold, notably, also is up a little bit, right? Gold did have some gyrations around this morning. It's also been trending up over the past couple of days, so gold is looking decently. Silver as well, I believe. Silver's been up also. So we've got some good stuff going on for pretty much everything that's not the dollar. Cryptos are up also. So all in all, interesting stuff. So tech stocks have been doing good. Let me pull up this story again. So Wall Street's looking good. Consumer prices, though, rise at a fast clip. Okay, so the highest they've been since 1982, the sharpest increase since 1982, did match estimates. But let's pull this data up real quick, and I'll show you guys exactly what I'm talking about here. So the CPI data, year over year, if you look at this chart, this is basically showing the year-over-year price increases. Every month, you get a new reading, and it updates the year-over-year expectations. So you can see that, yeah, we did make highs of 7% year-over-year increases today. And if you zoom out, you can actually see we haven't been that high for quite a while. In fact, like that article said, since 1982. So it's been quite a while since we've seen this much inflation. But let's see if we can't get the blue line going. So there you go. Yeah, the highest we've seen it since 1982. So somewhat scary stuff, right? I mean, I just paid $17 for dinner last night. And it was like a fast food burger place. So no kidding, the prices definitely are much higher than they have been. I mean, I was shocked when I got to the window and the lady said $17 for it was like 2 burgers and fries. I was surprised to see it, but we're at 7% inflation for the year. So it looks like 2021 was a 7% inflation year. We'll see if 2022 is higher or lower than that. Obviously, the Fed is going to try to fight it, like we discussed in a video yesterday talking about Jerome Powell's new stance on inflation, where he did call it a severe threat to some of our most important economic goals, like reaching maximum employment and being in a growth phase. So somewhat scary stuff, right? We are seeing relatively high inflation. It is the most notable number that we've had, once again, since 1982. So it's somewhat worrying. Some people in the markets don't seem to be too worried about it, right? The tech stocks are moving up. The markets are moving up because of it. The dollar isn't. The dollar doesn't seem to like this very high inflation reading. So people are getting out of dollars, potentially moving more into other assets like gold and stocks. Maybe expecting that there could be some more inflation on the horizon, that the dollar could lose more of its value. Maybe they're preemptively getting out of it. We'll see. The dollar has been on a tear lately, though. If you look over the past year just about, the dollar's been moving up fairly well, which I always thought was kind of surprising, especially considering how many new dollars we'd been printing the year prior. And let me see if I can pull up a story on the new dollars that we printed in 2020. Let's see if we can find that. So, okay. Here we go. So, here's an interesting story. Posted December 18th, so less than a month ago this was posted. 80% of all US dollars in existence were printed in the last 22 months. It went from 4 trillion in January of 2020 to 20 trillion in October of 2021. So crazy stuff. I mean, 80% of the money supply was printed into existence over the course of less than the past 2 years. So really crazy to see. I mean, 24 months is 2 years. So in under 2 years, we printed 80% of the money supply. Really, really scary to see. I mean, I was always surprised over the course of the past year that we didn't see much higher inflation with how much money we've been printing. Now, obviously, we did see a lot of inflation in terms of stock prices, right? If you look at the past 2 years in the S&P, we saw that big dip, and then we actually saw stock prices move up massively. So it does kind of show you where that money went, right? It didn't go into the hands of everyday people who are buying, food and cars. Obviously some people got it and used it to buy cars. Used cars especially, definitely got fairly expensive. But a lot of the money seems to have gone into the hands of wealthier individuals who just plowed it into the market. And we'll take a peek at what the market was up over the course of the past 2 years. And maybe that'll paint a little bit of a picture for you on just how much money went into the hands of these wealthier individuals. So the market was up. We have to zoom out a little bit here. We've got to pull it up there. So the market was up about 44%, and that's the SPY over the course of the past 2 years. And that was pre-COVID, right? So pre-COVID, right before COVID hit, at the peak, we're up about 44% from that point to where we are now. Before the pandemic happened and all that economic slowdown and supply chain issues hit. So we're still up 44%, despite all of the negative things that happened due to COVID and massive unemployment during the beginning and all that. We're still up 44%, and a lot of that is just due to how much money was printed and how many people just decided to pour it in to the markets. I mean, I know that, I definitely was putting some stimulus money into the markets. I know a lot of people probably were. And I'm sure that, the wealthier individuals who qualified for PPP and whatnot, a lot of them probably just poured money into the markets. I don't know what other kinds of government bailouts there were, but a lot of companies probably got a lot of money handed to them. A lot of wealthier individuals probably got a lot of money. And I'm sure a lot of it just went straight into the markets and continued to pump them up over the course of the past 2 years. I mean, you guys saw it, 80% of the dollars in existence were printed over the course of the past 22 months. And that was posted December 18th, so less than a month ago. So 80% of dollars in existence were printed in the last 23 months. How about that? Scary stuff to see. So I'm surprised, once again, that inflation isn't a little bit higher than where we see it now. I would have expected it to be probably a bit higher at this point, although you never know how they're measuring this stuff, right? Obviously, the government doesn't want to measure it in a way that makes it look like they're printing way too much money and like stuff is going down in a bad direction. So I believe they have changed the way they measure inflation, and particularly are measuring it in a way that makes it a little bit less severe looking over the long term. I forget exactly when they changed how they measured it, but I believe that they changed it so that it doesn't look quite as bad. And even though we do see somewhat significant price increases in some areas, like I said, I paid $17 to a fast food place for 2 burgers and fries last night. They did seem to change it a little bit. So we'll see what happens in the future readings. It seems like even with the current way they read it, inflation seems relatively high. Yeah. And they changed the way they measure CPI, Zach Taylor says. Yeah, they did. I forget exactly when they did it, but it's definitely not what it used to be. So the next thing that we've got is Fed Chief Powell says tighter policy needed to control inflation. So yeah, finally he admitted it. We did talk about that in a video yesterday. We actually played a little clip of him discussing the potential situation where they would need more rate hikes, and also a clip where he called inflation a severe threat to some of our nation's most important economic goals, such as maintaining maximum employment or reaching maximum employment and maintaining growth in the economy. So he did call inflation a severe threat, and it's scary to see him finally admitting that, but it seems like the right thing to do. He's definitely been hiding it for a long time under the guise that inflation is transitory. So it's good to see some truth coming out, but we'll see if he continues that tune. We'll see what he says about it, and if he actually ends up doing those rate hikes. A lot of people are skeptical of it. And the next thing, it's actually some good news that we could be getting, right? It doesn't seem like good news, and the chart that I'm about to show you guys certainly doesn't look like good news, but this has a positive spin to it. So Omicron may be headed for a rapid drop in Britain and the United States, and the reason they're saying this is because it's apparently infected so many people that it may be running out of people to infect. So we're going to take a look at this. We're going to take a look at the CDC data, and some new crazy data came out yesterday. I mean, it's absolutely insane what we just saw yesterday. So previously, the record for COVID case counts was, I believe, 974,000 new cases in a day. So I'll show you guys the chart, and you can see just how small this chart looks at this point. This is the peak that we saw last year during January of regular COVID cases. I don't believe it was a variant back then. It was just the normal, the first COVID, right? So here we go. It was basically, it peaked out around 294,000 new cases. And as time has gone on, we've had some new variants come out and end up spiking cases once again. And let's pull this up. So more recently, we had Omicron, which was apparently much more contagious, and it has absolutely skyrocketed to new highs. I mean, this blue line right here that you see on the side of the chart, that's not just there for fun. That's actually a new case count, the most recent one that came out today. I mean, look at this. This was the previous high that we had of almost 1 million new cases coming out in a single day. And then over the weekend, obviously, nobody gets tested. But then on Monday, we had 1.4 million new cases in the United States that day. So absolutely incredible numbers, really skyrocketing the new case rates. I mean, people are expecting, apparently some medical experts are expecting that we'll see a peak around January 19th, and then we'll start descending in case counts. But I mean, look at this on the chart. It's absolutely dwarfing everything that we've seen up until this point. Even the most recent spikes that were dwarfing everything we'd seen dwarfs them. So it's crazy to see just how many new cases there are. It doesn't surprise me at all, though. I think this one, this variant is quite infectious. So, fortunately, it doesn't seem to be as negative death count-wise. So we'll pull that up real quick. Here's the deaths. We still haven't reached peak deaths yet, even though we have been at peak case counts for a bit now. So fortunately enough, we are not at peak deaths, right? The deaths are actually very similar to what they were with Delta. We did have a day when they were a bit higher, but they still are nowhere near where we were back in January of 2021. So very fortunate for that, but still somewhat scary to see all of these new cases. A lot of people have been calling out sick from a lot of industries. United had to cut some flights because a lot of people were calling out sick. I was just the reason I went to the place I went to a Backyard Burger. I don't know if you guys have ever heard of that, but I tried going to an Arby's just to pick up something quick for dinner last night, and I couldn't actually get anything there. In fact, they were closed. I looked through the window, and there were some people inside, but when I tried going through the drive-thru, they were closed because of apparently so many people being sick, right? They said they were understaffed. They didn't specifically mention people being sick, but I could guess that that's probably why they weren't accepting anyone at the Arby's last night. So, it's taking an effect on a lot of different places, right? So it's not just airlines. I mean, even fast food joints are losing their ability to have enough employees to even serve people in the drive-thru. So obviously, a lot of things are temporarily going to close down. But once again, we may be coming to an end for this whole thing because it looks like it's done its job a little bit too well. It looks like it's infected so many people, and hopefully given those people resistance, that we may be done with it. At least according to this article, some doctors are saying that. So we'll see if that's actually the case. Hopefully it is. So the next thing is almost just continuing on with this. Basically, Biden sending more COVID tests to schools to keep them open. So I guess they can stay open as long as they test, is what it seems. So that will surely contribute to the case counts that we see on the CDC charts, right? The more tests there are, the more cases we're going to find, and the higher this number is going to get. But hopefully the more people who will be able to stay safe because of it. So all in all, not the best situation, but not the worst. It seems like we could be coming to an end with that whole thing, hopefully, sometime soon. That's the hope. But those are 5 interesting things to watch out for today. Now we do have a couple of interesting pieces of news. The first one I will pull up. I found it quite interesting. It involves 2 of your potentially favorite influencers, Kim Kardashian and Floyd Mayweather. So they're both being sued, and this is in the crypto space. They're both being sued by investors over an alleged crypto scam. This story just came out today, but a class action lawsuit accuses Kim Kardashian and Floyd Mayweather of artificially inflating the price of the cryptocurrency Ethereum Max. So let me pull up a chart of Ethereum Max if I can. Okay, so here we go. Ethereum Max. So this is the one right here. Oh, wow. That's not a good chart, but here we go. Ethereum Max on the chart. Look at this. So it looks like this is probably when they pumped it up, when it got up to highs of small fraction of a cent, but still, since then it's declined massively, and it looks like it was never that massive of a crypto. It currently has a market cap of around $26 million, maybe fully diluted $35 million. So not the largest crypto, especially at these prices, but obviously it's lost a lot of value since its peak. But we will dig into this a little bit and figure out what the heck happened. So apparently it lost around 97% of its value since June when it was pumping. And a lot of people obviously think it's a pump and dump. It probably was. But Kim Kardashian and Floyd Mayweather are being sued over allegations that they misled investors when promoting this cryptocurrency called Ethereum Max to their millions of social media followers. And it looks like, okay, so just last Friday, the class action lawsuit was filed, and they're being sued over false or misleading statements. So Kim Kardashian said in a tweet, an Instagram post, she said in an Instagram post, "Are you guys into crypto? This is not financial advice, but sharing what my friends just told me about the Ethereum Max token." So let's see if we can't find that Instagram post. I might search for it. Let's see if we can find it on Instagram. she may have taken it down. Let's see. Maybe there's a picture of it somewhere that we can find. I hope. That would be amusing to see. Okay, is this it? Okay, here we go. So let's open this in a new tab. So it's not the highest res. So look at this. I mean, this is, wow, this is the last thing that you would expect Kim Kardashian to know about or to say. But here's her story. Emax, hashtag Emax, hashtag disrupt history, hashtag Ethereum Max, hashtag WTF Emax. Okay, so she has a bunch of hashtags around it. And then on her story, it looks like a news page or something. She says, "Are you guys into crypto? This is not financial advice, but sharing what my friends just told me about the Ethereum Max token. A few minutes ago, Ethereum Max burned 400 trillion tokens, literally 50% of their admin wallet, giving back to the entire Emax community." Wow. And then it looks like she has a big story about it. It looks like there are a bunch of different tabs that she could have been posting on about Ethereum Max, but look at that. So she seemed to talk quite a bit about it. Now, apparently, she had the hashtag ad somewhere in the message suggesting that she was paid to promote it, but we don't know how much she was paid. However, estimates have placed her fee for sponsored Instagram posts in the $500,000 to $1 million range. So it's possible Ethereum Max said, "Hey, come on, Kim, we'll pay you $500K or $1 million. Just pump this coin." And it looks like she went along with it. And I mean, honestly, this post, I'll pull it up again because it's just so not what you would expect to see on Kim Kardashian's page, especially this one on the right over here. Right, this one, that's a picture of her that has the hashtags maybe. But this one over here on the right, I mean, that doesn't look like something Kim Kardashian would post. It looks like one of those crypto scams, but I guess that might have been what it was. Anyways, Floyd Mayweather also was in on this, and it looks like he endorsed the token in his boxing match with Logan Paul, which I did watch. It was a little disappointing, but it was interesting nevertheless. So let's see. He also promoted Ethereum Max at a major Bitcoin conference in Miami and was subsequently booed off stage. So look at that. And he doesn't appear to have disclosed payment information for his promotion of the token, the lawsuit said. Wow, so maybe he might be avoiding taxes. Who knows what he's doing with it? But but all in all, scary stuff, especially looking at that chart. I mean, never trust when some celebrity who's not into finance at all just starts talking about a weird small market cap crypto. I mean, with Elon Musk, it made some sense. It didn't make the most sense, but at least it kind of worked with Dogecoin. It still has some value, and it's still up massively from when he first started talking about it. But that's because Elon Musk, I mean, he's involved with Tesla and whatnot. He's already kind of in the finance space. He did start accepting Dogecoin at his Tesla merch shop. And Bitcoin, he used to accept that for Teslas. So he has some credibility in the space. And with Dogecoin, obviously, he's making a bit of a joke sometimes. But with these smaller pump and dump scams, I mean, we've heard of them time and time again. So that's what happened with Ethereum Max. And now it looks like, two of our favorite celebrities, Kim Kardashian and Floyd Mayweather, may be getting a big fat fine slapped on them. So who knows if that'll actually happen or not. But potentially a bad situation for both of them. They may be wishing right now that they never got involved with it, but maybe they made enough and they're wishing that they got more involved. So now we've got a little bit of Sundial news that I just took a brief peek at this morning, but we'll pull it up here. We'll pull this up, and we've also got another one. So here we go. We've got two little stories about that don't too closely relate to Sundial at the moment, but over the long term, they could be very beneficial. So more so just cannabis-related stories. Michigan breaks another marijuana sales record for December, state officials say. So it looks like Michigan is outdoing itself with its recreational cannabis sales. So let's see, they saw 135 million in recreational cannabis purchases and about 33 million in medical cannabis purchases. And look at that. So do we have numbers from previous years? Okay. So the latest data brings Michigan's total cannabis sales for 2021 to about $1.3 billion for recreational use and $481 million for medical use. Look at that. Also translating into hundreds of millions of dollars in tax revenue for the state. So once again, the more of this that we see, the more times that we see, cannabis breaking records like this, the more appealing it's going to look to the federal government, especially regarding how much national debt there is and the need for additional tax revenue, right? They definitely need to start collecting some more tax or some more revenue from some source because the national debt just keeps climbing. It looks like we're at 29 trillion, 711 billion, 473 million. We're definitely going to need to get this national debt situation under control, hopefully sometime soon. It doesn't look like we're on the path to doing that, but cannabis legalization and taxation could be one way to at least slow the ascent of this national debt number. I mean, it's absolutely insane how high the national debt has gotten over the past couple of years, especially with all this new money printing. So, really scary stuff. But the next story that we've got about cannabis-related, Sundial-related news. So, we've also got Florida cannabis activists pivot to 2024 for legalization ballot initiative. So it looks like this is unfortunately probably a little negative, right? Florida cannabis activists have officially turned their attention to putting adult use legalization on the state's 2024 ballot rather than 2022 as previously planned. So it looks like they're slowing down their path to legalization. So let's see. Here's a quote from the campaign for cannabis legalization. When we began this attempt at legalization in home cultivation, we told you that time was short. It appears that time has run out for this election cycle, but we have momentum and we have laid the groundwork for a successful campaign in 2024. So Florida is traditionally a slightly more red state. That could be the explanation for why it's being delayed. It looks like, all right. So the campaign will start on February 2nd, and activists will then have 2 years to first gather 222,000 valid signatures, and they will need a total of 891,000 signatures to make the ballot. All right, so it looks like we're slowing down legalization in Florida. Hopefully, we won't be slowing it down federally. I'm still fairly bullish on federal legalization coming in 2022. Obviously, this is just an example of how slow the government can be. Even state governments can be somewhat slow. Typically, we've seen them be a bit faster with cannabis legalization. It looks like in Florida, not so much. But so be it. All in all, not the worst news that we could be seeing. But we'll see what happens with cannabis legalization at the federal level. So we've got the market open coming right now. So let's zoom in on some of these charts. We'll pull up Sundial right here, and we'll pull up DWAC. That's an interesting one as of late. It looks like we made highs yesterday of $66, and we're close to it now. We're at 63 at the moment. So potentially we could be getting to highs of the week. We wouldn't have to go that much higher, just a couple bucks, and we could do it. I know a lot of people would be excited to see that happen, as would I. So we'll pull up AMC on this last chart, and let's see what's going on. So overall, looks like stocks, everything pretty much, is fairly green after this CPI reading. So the CPI, for those of you who just joined the stream or have joined in the past couple of minutes, CPI year over year came in as expected at 7%. We were forecast to have a 7% year-over-year increase in prices, at least in what this is measuring. So we did end up getting that 7% increase. However, it's not the best news in the world, right? Ideally, we would have seen lower than what we were expected, but 7% is still pretty significant. I mean, we were expecting that, but it is the highest that we've seen since 1982. So it's still fairly high. all things considered. The dollar did start tanking. I'll pull up the dollar in the bottom left real quick. I'd rather watch the dollar tank than DWAC tank. So there you go. The dollar is making new lows this minute on the day, and actually it looks like new lows of the month. So the dollar has not been this low the entire month. It looks like we're making new lows at the moment on DXY, on the US dollar. And we're potentially starting a big descent. So gold, it looks like, actually took a little bit of a turn. So let's pull up gold real quick. So it's not the worst news for gold. It looks like it just had some volatility between the after hours and the pre-market. It's not down all that much. It's down 0.05%. So not that bad. Silver is up a little bit. And the VIX, people are seeing that, stocks are moving up, that the inflation reading came in as expected. The VIX is moving down. There's a little bit less volatility in the market as the S&P continues to move up. We're up about 0.6% on the SPY at the moment. It looks like the first couple of bars have been relatively good for SPY in the top left right here. We've been moving up pretty good over the course of the first 3 minutes of the market being open. So all in all, not too much to complain about given the current situation, right? Given the fact that we are seeing 7% year-over-year increases in inflation, it's good to see that the markets are reacting somewhat well to this. I was surprised at first to see that the markets reacted relatively well to Powell's meeting, right, where he called inflation a severe threat. I mean, it looks like people are taking that to mean that he's finally giving it the attention that it really deserves and is potentially going to be making some good decisions surrounding it, because he also explained that he wanted inflation to go away because it interfered with the goals of continued growth in the economy and maximum employment. So, essentially he's saying that he doesn't want to end the growth that we're seeing in the stock market, which we have been seeing for many years. I mean, look at this chart of 5 years for the SPY in the top left. Look at this. We've just been moving up and up. COVID was one little blip in it. Probably the biggest blip that we've seen up until, ever, right? Over the past 5 years, it was the biggest blip that we saw. But Powell was essentially saying that he doesn't want this growth to stop. He wants it to continue. He just doesn't want inflation to interfere with it. So he'd be doing what he could to stop inflation, but he doesn't want the markets to fall. Obviously, it's his job to keep them green. So we'll see if he really does that, right? Obviously, he's going to try. He'd be relatively unpopular if he let the markets fall too much, but we'll see what he actually ends up doing, how many rate hikes he thinks are necessary to stop inflation. It could be that he's a little bit more dovish at heart than he is in mouth, right? Obviously, he probably doesn't say everything that he thinks. He doesn't want to scare the markets. He doesn't want to spook them. It's his job to keep people in good order and not too fearful, right? The more fear there is, the more potential selling there is. So it is his job kind of to be a spokesperson and not necessarily to tell people the truth. It's his job to tell people what's best for the markets to hear. So Zach Taylor says, however bad you think things really are, I promise you, they're much worse. Could be. 7% inflation is nothing to scoff at, right? I mean, that's 7% in a single year that your dollar has lost value. So it's really scary stuff, honestly. And people probably are underreacting to that a little bit, right? That you can buy 7% less stuff. It's almost 10% less stuff that you can buy. So imagine if, this really had the effect of what it sounds like it has, where, you have 7% less food. Your house is 7% colder during the winter because you can't afford the electric bill to be as much. I mean, 7% colder. Let's see if you're keeping it at, let's do a little calculation here. If you'd like to keep your house at 70 degrees times 0.07, then you got to keep it at 65 instead. So I know a lot of people, if they actually had to live with this 7% decrease in lifestyle, if they couldn't just, dip into their savings more. Some people don't have savings. If they couldn't just dip into their savings more or take out more debt, or, obviously there were some wage increases to help counteract that. But if those didn't come to you or affect you, and you really had to live with 7% less of everything, you wouldn't be too happy about it. So that is one way of thinking about it. Obviously, it's not a perfect example, but it is somewhat scary to hear that inflation is so high, and somewhat surprising to see that the markets are reacting so decently to it. Although it looks like we just erased all the gains that we had over the first 3 minutes of the market open during the next 3 minutes. So the market's just started moving down a touch. But I did want to show you guys, we talked about Ethereum Max. What we haven't talked about yet was the rest of cryptos, which are actually doing incredibly well today. So let's pull this up right here. The cryptocurrencies on CoinMarketCap. Bitcoin up 5.66%. So, a lot of people were probably very worried when they saw Bitcoin hitting $40,000. Those people are probably now a bit less worried because Bitcoin is now at 43,750. So we're a decent ways away from 40,000. We'd have to drop a couple thousand to get there again. Most of that gain came today. We're up about 5% or $2,300 in Bitcoin over the past 24 hours. So it looks like as this 7% increase in inflation for the year report came out, it looks like people started flocking to all of these cryptos because it's not just Bitcoin that these gains are in, right? It's Ethereum as well. Ethereum is actually up. Ethereum is actually up more than the entire inflation rate for all of 2021. Ethereum is up 8.09%, and obviously, some people think that the inflation is a bit higher than the 7% figure, right? It doesn't measure everything perfectly, so maybe it is a little bit higher in real terms, right? If you're actually out there in real life buying things, you're probably paying a little bit more than 7% more for some things at least. So maybe that explains why people are moving cryptos up so much. Obviously, if you're buying assets or anything like that, and those aren't measured in our inflation readings, assets certainly moved up quite a bit. I mean, look at Ethereum alone, right? Ethereum, if you're talking about inflation in Ethereum, in terms of dollar inflation, right? The dollar lost value against Ethereum massively. So you could have bought Ethereum for $1,000 at the beginning of 2021. Now, at the beginning of 2022, you have to spend $3,300 to get Ethereum. So that's true for a lot of cryptos. The dollar's certainly lost value against a lot of these. BNB is up 7%, Solana up 7%, Cardano up 10%, Ripple up 8%, Terra Luna up 12%. Dogecoin and Shiba Inu even are both up. Dogecoin up 5, Shiba Inu up 11. So, a lot of the cryptos are coming back in a fairly significant way. I mean, anyone who bought the dip yesterday has been rewarded with, depending on what you bought, with gains that you could typically expect to see over the course of a year in the stock market. So, all in all, really good stuff for cryptos. They've been performing pretty darn good over the past 24 hours. So, let's see. We've got the VIX. We need to pull up DWAC again. It looks like DWAC did end up making highs of the week. So, we saw a negative first couple of bars and then bounced off of 62.50 and moved up to 67.89. Now we're taking a little bit of a breather, it looks like, but that is highs of the week. So if you look at the past, we'll pull up the past 5 days. It looks like we've just been on the way up. So we made new highs again today. We're continuing that uptrend that we've been in over the past couple of days. Ever since the True Social release date was announced, it looks like we've been moving up for the most part, right? There was one day, the day right after, that we didn't do too good. But since then, it's been higher highs each day. So exciting to see. And we did cover some True Social related news yesterday. Now, unfortunately, a story from the Washington Post, which some people have pointed out might not be the most reliable for this kind of news. Unfortunately, that story did say that True Social probably wasn't coming out for months. Now, who knows if that's accurate or not? They've posted a bunch of things that are a bit negative towards True Social and DWAC in the past, so it wouldn't surprise me to see that just being talk, right? Just trying to get people out of this stock. Maybe they know some shorts that they're friends with. But let's pull up the short interest real quick on DWAC just to see what it's sitting at. Let's see what we've got on this. So, yeah, look at that. Some additional shorts in DWAC today. So we've increased the short interest today by almost 1%, 0.91%. So almost 1% more shorts in today than yesterday. We're at 3.56 million shares short. 11.85% of the free float is short in DWAC. So it's not the highest it's been. It looks like we have been decreasing potentially over the past couple of days, but still probably one of the heaviest shorted SPACs out there, if I had to guess. That's what I've heard at least. So a lot of people are shorting DWAC. We'll see what happens with it. I don't think we should see too much bearishness in the future. Now that we've really got some stuff potentially coming out soon, True Social specifically, I think that once the platforms really get out there, and if we see massive user growth on those platforms, I think it should reflect very well on this stock. So we'll see what happens with it. Hopefully we will see that massive growth. Looks like we're taking a little bit of a dip down to where we opened right now, but we'll see what goes on with it. It looks like the SPY is starting to react a little bit more poorly to the inflation data. We've been kind of hovering around the open, but we're starting to move down. So it looks like we're starting to see some negativeness in the markets, unfortunately. Let's see what we've got. The S&P map is not live yet, but we'll pull up some of the more popular stocks at the moment. So, oh wow, look at this. On StockTwits, the most active, we've got SPY, obviously, right, because the CPI data came out today. We've then got AMC. What else is new? Bitcoin, because it is up actually somewhat significantly for Bitcoin at this point. 5% it's a decent move for Bitcoin. And then number 4 is DWAC. So look at that. It's the number 4 most active on StockTwits. A lot of people talking about it. Interesting to see that. Ooh. And we need a little bit of water now to wash down that coffee. But also, notably, someone pointed this out earlier in the stream, OCGN. OCGN moved up big today. I don't know the news quite yet, what they're moving up on. So it looks like Ocugen says data shows Covaxin booster neutralizes Omicron and Delta variants. So look at that. So, that's certainly good for them, right? However, like we were talking about earlier, it may not be necessary because Omicron may have done its job too well and infected too many people. And now they may just have natural immunity from it. So we'll see if that actually happens. It looks like what? University of Washington's own highly influential model projects the number of daily reported cases in the U.S. will hit 1.2 million by January 19th and then start to fall sharply. So the University of Washington expects that around January 19th, we'll start to see a massive decrease in cases because pretty much everyone will have gotten it at that point. So that's what they're expecting. We'll see if that's the case. Hopefully it is, right? That'd be good to see an end to this whole thing. If we didn't even, obviously, it wouldn't be the best situation for Ocugen because they'd like it to maybe stick around for a bit so that they can sell some of that booster. But we'll see what happens with them. They are up about 6% on the day. They're not up at their peaks. Maybe people are coming to the same realization that we probably won't be dealing with Omicron just because of how infectious it is for too much longer, right? It might mutate into something else, but then obviously they'd need to test the effectiveness of their booster on that. So we'll see what happens with it. We'll pull back Sundial real quick. It looks like we saw some volatility. We're playing around 60 cents today. Hopefully going to get there soon. But right now it looks like we might start to use 59 as support. Ideally, we would just continue moving up. But like we've said, over the past 30 days or so, we've just kind of been stagnating with Sundial, which all in all is not the worst thing, right? I'd much rather see us stagnate than see us continue to descend. I think that we've descended far too much. Um, and hopefully, this stagnation is building up the base of support that we need for people to see, to finally have a little bit of faith in Sundial, and to finally, maybe get some big players, some whales, to start pouring some real money into it. That would be very beneficial, I think. So, hopefully they'll come out with some big news soon. Hopefully they'll do the share buyback as well. Maybe some of the Alcana shareholders, when they get their Sundial shares, will buy up some additional shares with that cash payout that they're going to get. So there are a couple of things coming down the pipeline that could be good for Sundial. We want something to happen before February, so we'll see if that's going to be the case. Okay, so that S&P map is still taking its time. It really doesn't want to update. That's fine. We can pull up Reddit in the meantime and see what's going on, what we've got. So, man, we may have to end the stream at 10 today. My throat's still not quite with it. Getting slightly, actually, hold on a second. This is really convenient stuff that I've got right here. It's Tic Tac gum. So, I find that my throat does not hurt nearly as much during any time if you've got something sweet to chew on. But, anyways, the trending stocks on Reddit looks like SPY is number 1. That's probably just going to happen because of the CPI inflation data coming out. GameStop moved down to number 2, displaced by the SPY. Then we got Tesla. We'll check out Tesla in a minute. Then it's the QQQ, also probably up there because of the inflation data coming out. And the big rally that tech stocks have been seeing. All right, so then it's AMC, and then a bunch of tech stocks. So nothing too crazy on Reddit, but we will pull up Tesla real quick. Okay, so it looks like Tesla looks like it just hit highs of $1,088.88. A very interesting price. Looks like we're still we're basically following the trend with Tesla at this point of the overall tech stock movement, right? So the QQQ, will pull up the QQQ next to Tesla, and it looks like we're seeing a very similar thing, right? So we did see a big dip. Let's see, this was, Monday? We saw a big dip early on Monday, and then a rebound ever since. So this week's been pretty darn good for tech stocks and for Tesla. Not quite as good as it could have been had we not dipped a lot in the pre-market, but overall, there's not much to complain about there. You're still sitting pretty if you've got any of these tech stocks. Over any period of time, really. If you look at the 1 year, these tech stocks have been doing incredibly well for such a long time. Let's pull it back even to 5 years. Look at this. It's just been a straight line up, basically. The dip of COVID wasn't even that big. When COVID first hit, we didn't even see that big of a dip in these tech stocks. So, all in all, they've been doing incredibly well. We'll pull out the max chart right here and just see how awesome these tech stocks have performed over the past while. So obviously there was the dot-com bubble, and that took them down quite a bit. But since then, they've been doing pretty darn good. So we really haven't had any significant pullbacks since 2008, it looks like, when they did move down a bit. But all in all, we're looking pretty darn good with QQQ, with these tech stocks. And maybe we'll be able to find that market map sometime soon if it ever updates. It seems to take longer and longer to update every day, unfortunately. Yeah, it's too bad. It just sits here gray. But my expectation would be to see a very green tech market, and potentially not as green for the rest of stuff, right? Those stocks do, in my opinion, tend to react a little bit less well to inflation, right? The ones that really do have input costs, a lot of the tech stocks, if they're Apple, then they do have input costs, right? If they're producing tech tech hardware. But a lot of tech's business is just selling software. And inflation really shouldn't be that big of an impact on it. Obviously, you have to pay the coders a little bit more. You have to pay a little bit more to have the stuff developed. But once you get applications developed, it is kind of just a fixed cost that you've paid, and then you can sell unlimited copies of whatever software you've got. So all in all, tech stocks tend to be a little bit more insulated from the direct pressures of inflation, and you might see something like Walmart doing a little bit more poorly, or McDonald's or something like that. Even though they can eventually raise their prices, when they raise their prices, slightly fewer people will go each time, so they might take a little bit more of a hit than a lot of the tech stocks might. So all right. So Tesla is up about 2% on the day. Nothing too shabby from Tesla ever, pretty much. Tesla always does pretty good. AMC's up 1.5%, DWAC up 2.25%. SPY up 0.5%. It looks like it's rebounding. And Sundial, let's see. Don't be red, Sundial. It's up about 1% on the day, so good to see. So overall, pretty much everything is green. NAKD is the only fleck of red that we've got. It looks like it's down another about 4%. We've just been getting crushed with NAKD. A lot of these small market cap stocks have absolutely been crushed. Like we were talking about earlier, the big tech stocks, and now we finally have the map, we can pull it up. The big tech stocks are definitely the ones leading the market, right? Apple, Microsoft, Nvidia, Google, Facebook, Amazon, Tesla. They're all the real big ones that move markets when their price moves. So what we've seen over the past couple of years is, the markets have been moving up, but a lot of these smaller market cap stocks have actually been in bear markets. I mean, take Sundial for example. It's been in a bear market for months and months and months, just trending down ever since February. It's pretty much been trending down. There have been a couple of blips, but a lot of these small market cap stocks have just been getting annihilated. MMAT, we'll pull that one up. Metamaterials, right? It had a pump up in June, and then just got crushed the rest of the year. So, a lot of these stocks. So we'll pull up MindMed, MNMD, also getting crushed over the course of the year since looks like April or May. Yeah. So since May, it's just been getting crushed. A lot of these small market cap stocks have been in these bear markets, and it's not just a few. It's the majority of the small market caps, I believe. And the overall markets have just been moving up, even though sometimes the small market caps, some of the smaller ones aren't included, but some of the mid-sized ones are. Especially in the Russells, IWM. The Russells, you can actually kind of see it. It's been somewhat negative over the past year. It's been just kind of stagnant. Which, in this market, when you see stuff moving up every day, you're confused why your portfolio isn't, and it's because you might be in a lot of these small market cap stocks that have just been getting overly shorted a lot of the time. A lot of people have been getting rid of those small market caps. A lot of people have been selling them, just trading them out for something a little safer in their opinion, right? The big tech stocks. And it's unfortunate for a lot of the small market cap stockholders who wanted to see some big gains, but I think over the long term, it's providing some real value opportunities to get into over the long term, right? If you're not too worried about these short-term fluctuations, specifically, the short-term fluctuations to the downside, I think that there are certainly some opportunities to get into some of those smaller market cap stocks, and you're not paying a big premium like you might be with the big tech stocks. We'll take a peek at some of the PE ratios that you're paying when you buy a big tech stock. I mean, we did this yesterday. It's fairly significant. Amazon trades at a PE, we have it right here, of 64. So you're paying a massive PE for Amazon. What about, let's pull up NVIDIA. I think that one was high too. You're paying a PE of 86 with NVIDIA. AMD. Pull up AMD. PE of 42. So these are absolutely massive price to earnings ratios. A lot of them are justified somewhat, right? Somewhat justified because they are very large, powerful companies and viewed as relatively safe. So a lot of people want to get into them. So it makes sense that the larger tech stocks that have a bit more security that they trade at these higher valuations. But we'll pull up some other stocks. Oof. In just a second. We're going to take a quick break, quick bathroom break. I'll be right back, guys. And then we'll pull up some other stocks real quick. Just sit tight. Okay, we are back. So we will pull up some other stocks real quick. I'll try to pull up some smaller market cap stocks here. So let's see. Okay, so let's try to pull up some of these. So, so here we go. So, Avis Budget. Here's one. $11 billion market cap, so much smaller than a lot of those big tech stocks. 16 PE, so relatively tiny PE compared to what some of those big tech stocks are trading at. It's in the Russells. We'll try to find some more of these that have relatively reasonable PE ratios. No, we won't look at AMC. I don't believe, is AMC profitable? I don't think so. I think they may have lost a little bit. Okay, here's one that we might like. This could be good. Okay, so I'm pretty sure some people might be a fan of this one. Crocs Inc. So I'm pretty sure these are the shoes Crocs, right? And 11 PE. I mean, Crocs are incredibly popular. You know, I never wanted to get any, but a lot of people certainly seem to like them. So Crocs trades at a fairly low PE, $7 billion market cap. These are examples of some stocks that obviously have lower growth potential than some of the big tech stocks, which is likely why they trade at these lower PEs. But for a long time also, people have just been pouring money into the SPY, into the QQQ, pumping up the prices of these tech stocks and leaving behind a lot of the small market cap stocks that have been suffering and falling over the past year or so. So, 2021 was not a great year to be in these small market cap stocks. You can see 2020 was fine. It was great. Even it was pretty good, especially if you got in at the bottom of the COVID scare, right? That was actually a great time to get into the Russells, into a lot of those small market cap stocks, because even now, if you just held, they doubled. Granted, you'd probably have done better selling just at the beginning of 2021, because the movement was basically just sideways since then. However, hopefully what we'll see is a big increase in these stock prices, rather than a decrease in the SPY and the larger market cap stocks. I'd much rather see a big increase in these stock prices to bring them more in line with potentially where they should be, right? Just because their stock prices haven't been growing doesn't mean those companies haven't been making developments and becoming better fundamentally. So there really is some potential with some of the smaller market caps, I think, especially going into 2022, because for so long, it seems, for the past year basically, these things have just been building up energy, trying to break out, and I think that when they do, it could be in a big, big way. So we'll see what happens with that. Obviously, there's a lot of stocks in the Russell's 2000. Not all of them are going to do incredibly well. Some will likely even go bankrupt at some point. But we'll see what happens over the course of 2022. It hasn't been a great start so far, right? We started off pretty good, and then we did end up dipping down fairly low on all of these potentially inflation fears, but also just on a general market downturn that we were in. The SPY, not even the SPY was immune to that. The SPY is coming back in a bit of a better way than the Russells, I'll say, but we're still doing decently, at least in the Russells. Now, the Russells is probably, and by the Russells I mean these small market cap stocks, I think over the next 5 to 10 years are probably going to outperform. Not all of them. Obviously, the Russells itself probably won't outperform the SPY and QQQ. But if you select the right ones for the right reasons, then I think you really stand a good chance of outperforming some of those bigger tech stocks. The tech stocks are going to be tough to beat, I will say. They are typically pretty big earners over the long term, right? They do draw in a lot of revenue. They have great business models. They're going to be tough to beat, but there is something to be said about new up-and-coming stocks, right? That get hyped up quite a bit. You can definitely make some big gains in those as well. So it is just after 10, and once again, we're having to end it a little early today. My throat's just not quite there yet. But we will be back tomorrow at 9, and potentially we'll have a very cool announcement tomorrow. We'll see. I'm trying to get this done by the end of the week, but we have a potentially really cool announcement coming very soon. And other than that, guys, have a good one. But hopefully also we'll start doing the hour-and-a-half streams again. I'd really like to, but still, my throat's just not quite there yet. So we're ending the stream for today. Hopefully we'll continue to see a green day in all the markets and all the stocks that we love. But other than that, guys, have a good one. See you tomorrow. Stay tuned for that announcement, right? We might have something very exciting to announce on the stream tomorrow. So I'll see you guys tomorrow at 9. Bye.